All right, ladies and gentlemen, welcome to this session. My name is Timothy Carrier, and it's my pleasure to have you in this session today, whereby we are going to discuss about how to build a bulletproof trading psychology. When it comes to forex trading, what really matters is psychology, because you understand that you might be good in strategies, you might be good in charts, but when it comes to psychology, that's where the rain starts beating us. So the key thing is now, for this webinar, is to be able to help you guys on how to be able to build a bulletproof trading psychology, such that irrespective of the market conditions, whether volatile, whether unvolatile, as in you are prepared. Basically, your psychology is at par, because trading is 90% psychology and 10% execution or strategy. So let's get into the matter. So like I have said, the first thing that we need, or the key thing that we need to consider when it comes to trading, is how to be able to become resilient, especially in terms of your trading psychology, right? So in terms of trading psychology, what is the first thing that I'll begin by mentioning, basically to help you in terms of your trading psychology. We will begin by looking at the objective of this particular webinar. So the first objective that we are looking at is why psychology is the real edge in trading. Also, we'll be able to understand how to handle fear, greed, and revenge trading. Also, we'll look at the neuroscience of decision making, and especially under pressure. And then we'll look at the tactical tools to build emotional resilience, and I will give you the 4-step framework for bulletproof trading psychology. So, why most traders fail? Like I said, 90%, according to statistics, is that 90% of traders quit within 90 days. And the 10% that succeeds after the 90 days, then 90% of those 10% usually quit within the next 90 days, or maybe a total of 180 days, right? So not due to lack of strategy, but due to lack of self-control. Because like I've mentioned, and like I've been able to interact with many traders, this being my ninth year in the financial market, the goal is not the bigger problem, or the bigger issue is not about analyzing the charts, because even myself, when I began, I was really good. You find that when it comes to analyzing the charts, it wasn't really a bigger problem. But now, taking those trades, managing those trades, and that's where the bigger chunk of psychology comes into play. So what you need to understand is that the market is neutral. The market is always neutral. So your reaction isn't, because you're either going to react pro or anti-pro the market, right? So the trading psychology loop, basically how it works is, you find that it begins with thoughts, then emotions, then actions, then results, then back again to thoughts. All right. So this cycle basically, it governs a trader's behavior and results. So you find that when you're trading, or when you begin trading, it begins all the way with your thoughts, which now your thoughts are able to create emotions. Through your thoughts, they help you create emotions. Then those emotions will definitely influence your action, and your action will produce results. So the outcome of these results then reinforces your thoughts, either positively or negatively, repeating that loop again, from thought, emotions, to action, to results, and to thoughts. All right. So for instance, fear-driven thoughts can lead to hesitation, causing missed trades and poor results, which then confirms the original fear. So understanding this loop will help you as a trader to identify what I call mindset. All right. To identify your mindset, in terms of breaking it down and how to interpret negative cycles to create consistent discipline and confident trading behavior. So it's every action starts with a belief, right? And now your trading results reflect the inner world. That is what you're believing within yourself. Okay, so then we have the four hidden enemies of traders. And what are these? This is whereby we are talking about fear. So fear will lead to what we are calling hesitation. All right, fear will lead to hesitation. Hesitation is whereby you are not you are not sure whether you are going to take a trade setup, and by the time you are leading with your hesitation, you find that the setup has already left you. Maybe your entry was at maybe let's say 1.1, so you find that now maybe because of hesitation you take the trade maybe at 1.2 or maybe 1.3. Then also fear will make you to exit on the trades early, and this has been a very common mistakes that we have seen with the traders, or that I even myself experienced as a trader when I was very green into forex trading, such that I could be able to hold so much on losses, but immediately my trade turns blue, then I cut short. Or maybe if I take a trade, all right, if I take a trade and then I'm in profit, let's say maybe I'm targeting $10 and I am $3 in profit, then I see like the market is pulling back, then because of fear, I find myself exiting out of that trade very early, because the moment you exit, it's like the market is monitoring you, because the moment you exit, that's when the market now starts going in a direction. I know all of us have experienced these kind of situations. Then we are talking about greed. So greed is a very bigger, looking at it in a bigger picture. This is whereby you want to make quick money within a shorter duration of time. So what will you do? The key things that will lead to greed is over leveraging, right? So basically opening so many positions, yet your account cannot be able to hold, your account balance cannot be able to hold those positions, right? So then not taking profits, right? So when you are trading and not I mean we do not take profits because sometimes you tell yourself, like yesterday I was interacting with a trader mentioning about the all times of gold, and he was saying that for gold right now you can take a trade without even a TP, and you sleep and wait for gold to go to 4,000 levels. And I was just laughing because whatever goes up comes down, and again the financial market do not move in a straight line, so there has to be pullbacks, right? So the reason why you have to do take profits. Don't be greedy. Don't be greedy in the markets. Always take what is enough for you, because again we are guided by the daily maybe the targets that we have on a daily basis, and that answers most of your questions, because some of those people who have interacted with, they ask me, why do I do only 100 pips on gold, and yet the potential, there is a potential that the price can be able even to go 400 pips. All right, it's because the first thing that I understand, it's because I control the levels of it's because I control the levels of I mean I control myself so much, such that I don't become greedy, to avoid being greedy. So you just take what is enough for you. Like I've always said, I usually target 50 pips on a daily basis for in my trading journey. So that means in a weekly time frame, I'm looking at 250 pips. So if I get 3 good trades, maybe for gold, 3 good trades, because my gold setups usually goes to 100 pips. So if I get like a 300 I mean 3 good trades eating my TPs, then you find that I already have even more than my target. That's about 300 pips, right? Because again, for you to be able to tame greed, is to avoid trading all the time. I know you have heard me saying that when I was a beginner, I really loved a lot to I really loved a lot to look at my MetaTrader 5 and see trades running. I think there was an excitement that was coming out of that. It didn't really bother me whether I was in blues or maybe I was in reds, but I felt like now I'm a trader. Once I have those trades running in my MetaTrader 5, I feel that now I am a trader, right? So then there is the aspect of ego, and ego is basically refusal to accept losses. And I know this is where most of us really go through hell, because the moment you come into forex trading, if you don't understand that losses are part of the game. Actually, we say that losses is the school fees you pay to learn. So if you don't understand that losses are part of the game, then because you're being led by ego, such that now if you take a loss, you want to do revenge trading to recover your loss. And the moment you start doing revenge trading to recover your loss, higher chances that you'll end up even losing more, right? So it's good to be able to manage our ego in the financial markets. Don't be accept anytime you take losses, just accept that losses are part of the game, because again what is really important is the moment you accept that losses are part of the game, then anytime that you take a loss, you'll be very well composed. And again, this loss, you are taking it a loss that is well calculated, that is risking what you are willing to lose. So if you risk what you are willing to lose and you lose what you had risked to lose, then ego shouldn't play or shouldn't find a place in yourself. All right. So the other thing that you need to understand, the other thing that is very important is impatient, right? Impatient is chasing setups, forcing trades, right? So I think for the traders that we have been able to interact with, I've always told you that it's good to wait for the trade setup. Once you have a setup, maybe you are looking at, let's say, maybe buying gold at 3,000, and then gold retraces maybe to 3,005. All right. So, and then you end up taking a trade before the market comes into a setup. So what will happen? Maybe you find that the trade will continue maybe to retrace, coming to your entry, and that means that you have increased your risk. All right. So by the time maybe if it's a losing trade, you'll end up even losing more than you had calculated to lose. All right. So it is important to wait for setups. Don't chase the market. Let the market find you to where you are waiting for it. Let the market come exact point of your entry, so that now you can be able to execute. So don't trade with FOMO. FOMO is what we call fear of missing out, and FOMO is what is going to make you now to start chasing setups. All right. So also, another way of chasing setups is when you know that the best time to trade your asset is maybe during the New York session, but now you feel it's early in the morning, maybe around 9 a.m., and you feel that 3 p.m. for the New York session to open, it's quite far. You could have made something maybe before that time. So that is trying to force setups, chasing setups. So the best thing is to stick to your plan and execute the trades according to your setups. Once your setups confirms 100%, then now you can be able to execute your trade. All right. So whatever else is important, is good to look at what I usually call the bulletproof principle. That is self mastery, market mastery. Right. Self mastery is equals to market mastery. Self mastery is equals to market mastery. So it begins by mastering yourself. All right. And guys, many a times I've been able to tell you, if you yourself you are in discipline, then you know that even when you come to the financial markets or trading forex, you'll still exercise that form of indiscipline. All right. So it all begins by mastering yourself. It all begins from within yourself. Okay. So when you talk about self mastery, which leads to market mastery, here we are emphasizing more about beginning by mastering yourself, because if you master yourself, then it means that you know you are what really bothers you, especially in terms of emotions. So you'll be able to know whether you are emotional, you'll be able to know whether you are greedy, you'll be able to know whether you are fearful. All right, because you find that many traders obsess themselves with so many strategies and setups, but they overlook the internal discipline that is required to execute consistently. All right. The key thing here, or the principle behind this, is that emotional control, patience, and self-awareness are what are going to separate you, or that's what separate basically the profitable traders from the non-profitable traders, or the losing traders, or what I call the impulsive traders. All right. So without, you realize that in forex trading, without self-mastery, even the best trading system will fail. All right. So even if you have the best trading system, the best trading strategy, it will definitely fail. Okay, because like we have said, self-awareness, patience, emotional control, that is what we are calling self mastery. So this basically, the key thing is for us as traders to be able to develop routines, mindfulness, and emotional regulation techniques. Right. So this is how now you can think about things to do with affirmations. All right, or meditations. Okay. So I'm going to talk more about that as we proceed. So by mastering your mind, basically you can respond to the market with clarity. All right, you can be able to respond to the market with clarity, and therefore making yourself consistently profitable or consistently strategic, rather than being reactive to the markets. All right, so it is very, very important. So the reason why we are saying now the market, because the reason for the self mastery is because now the market is uncertain. Definitely we know that, like we don't know what will happen maybe in the next 5 minutes, or in the next maybe 20 minutes. Something might come up, and then we see the market reacting against what we wanted them to react. Right. So then if the market is uncertain, you yourself, then you must be constant. All right, how are you going to be constant? It begins by self mastery. Right, because now you're able to control your emotions, you're able to control fear, you're able to become patient even in times of uncertainties, and therefore now you remain constant. Okay, so the key thing for you as a trader is to be in a position whereby you can be able to control the process, not the outcome. All right. And when we talk about controlling the process and not the outcome, you understand that the outcome is the results, or the dollars that you're going to make. Right. The moment that you have analyzed your trade, then the key thing, whatever matters here now after you have executed the trade, is how you are going to manage that trade, and that is what you're talking about, controlling the process. You might be targeting 200 pips, because you know if the trade is 200 pips, then you have attained your daily target maybe of $200. All right. So then you might end up putting the take profit in a place whereby maybe it's going to give you the $200, instead of looking at the market structure. Maybe that trade setup could have given you, according to the market structure, maybe $150. All right. But because in your mind you have not, your mind is static, such that you really need to make that $200, so you just try to exaggerate the take profit points. All right. So that is not what you're talking about, controlling the process. Controlling the process is whereby now you are able to track and manage that trade effectively. How do we manage running trades? That's where now you do things to put your stop loss at break even, put your stop loss in profits. That's what we say, trailing your profits. Right, and also taking partial profits. All right. So because it is not a guarantee that the market gonna reach to your intended place of or the take profit, even if the take profit was guided by the market structure. Sometimes we find the price missing even the take profit by maybe 10 pips, even 1 pip. We have seen such kind of scenarios. So you don't stare with to that kind of a market waiting or hoping for the market to go back and hit your take profits. That's where now you come in and control the process, right? So whatever we have the control of is the process. How you are going to control the process is what is going to determine whether you are going to be profitable, right, in the long run. Okay, so daily habits are very important. All right, daily habits they are very important. We are talking about once in a while genius. So daily habits, it's what you do on a daily basis. All right, so remember, whatever you repeat severally, it becomes an action repeated severally becomes a behavior. All right, so and a behavior, that's what we are calling habits. Okay, so if you are not maybe controlling the process, if you are not taking partials, if you are all the time you are fearful, all the time you are taking maybe probably you're over risking, then that becomes a daily habit, and you find yourself struggling so much in terms of trying to understand or in terms of trying to curb that behavior. So the reason why self mastery is important. So if you master the mistakes that you are making, then it means that you are in a position that you can be able to avoid those mistakes, and now you'll be on your way now to market mastery. All right, so that is very important. As a trader, it's very important for you to begin by mastering yourself first. Then now you can be able to master the markets. Okay, so the other thing that is very important is understanding the threat response. All right, so we are talking about understanding the threat response. So what is the threat response, or what are we trying to talk about here? So when we are talking things to do with the threat response, we are talking about trading under fear, which leads to flight and freeze. All right, so but I'll explain that. Also, you need to understand that your brain is wired to avoid pain, all right, not to make money. Okay, so then there is the neuroscience that is very very important for you to be able to understand as a trader, and also how to reframe away from fear. Okay, so what is important, understanding the threat response. The reason why it is important, this helps you to break down how the brain's natural survival instincts impact your trading decisions, because it all begins from our brains. All right, it all begins from our brains. So when traders perceive a threat, right, like maybe a potential loss, because that's maybe a threat that you can be able to perceive as traders. Losses are threats, so the brain activates the fight, flight and freeze, right, response. This basically you find now it triggers the emotional reactions such as panic. So you begin panicking, you begin hesitations, then there is what you're calling impulsive exit. It leads to also the impulsive exit. You start exiting the trades early. So what you really need to understand is that the fear itself isn't a weakness. It's basically biological. The reason why we are talking about the neuroscience, all right, some things to do with the brains, because it all begins with our brains. All right, so since it's biological, then what you need to understand is that in trading, these responses often lead to poor decision making. Right, so how your brain is going to respond, the fight, flight or freeze response, basically that's how the brain is going to respond. So the fight is whereby now you're trying to revenge trade because you have taken a loss. All right, the flight is whereby now you have fear such that, or maybe you exit out of the trades early. The freeze, now that's where you have the fear, which leads to hesitation such that now you are freezed, you fear even taking maybe another trade, and these will definitely lead to what you are saying, or what you are calling poor decisions. Okay, so by recognizing fear as a chemical response, all right, because it begins from the brain, don't forget that, traders basically can start to pause, breathe and respond logically. That's why now you take a break. All right, you reassess yourself, you take that's what you're calling the pause. You can take those deep breaths, breathe in, breathe out, all right, and then now you're able to relax and now be able to respond logically, because if you respond immediately, definitely it will lead to poor decision making. Probably you'll find yourself over trading. Remember, the goal is to train your mind to stay composed under pressure and trade with intention. That is the goal. To train your mind to stay composed under pressure and to trade with intention. Okay, like right now we have a lot of pressures in the markets, all right, so you need to be composed. Remember, there was a certain image only that I cannot be able to share here. I had shared with my colleague Jeff. It was what do we call them? It was an image whereby we had someone in a cliff, basically relaxing, taking some puff, and then he was seeing people fighting. And now the person was this person resting on the cliff. He was looking at the market fighting now, and the market people fighting. It was a representation of now the tariffs that are ongoing on. So this person looks unbothered. Why? Because the goal is for you as a trader to stay composed even under pressure, such that irrespective of what is happening around, you're able to compose yourself and no panic, all right, and therefore you're able to trade with intention. Okay, so that is very, very important, understanding the threat response. How do you respond when the market when you are under pressure, when the market is uncertain? How do you respond? Maybe probably are you the kind of a trader who stays away from the market because you say that the markets are untradeable, right? Or are you the kind of person who now takes advantage of the volatility in the market? You remain composed and you approach the market with intention. Okay, so again, that separates us, those traders that are profitable with the traders that I usually call impulsive traders. Okay, so it is a very important thing that you need to consider in your trading. So then we are talking about dopamine and the need for more. All right, dopamine and the need for more. Guys, you can bear me witness, especially the newbies. The moment you trade and make a dollar, you always feel to trade more. All right, because that's the dopamine. That's how human beings are wired anyway. You want to make more, so there is that aspect of greed. The need for more is now what we can call in another term, greed. So it's dopamine and greed. So the more you make money, even if it's not in trading, the more you want to make more money. And this explains, by the way, the reason why you see most of the prominent people in the world, right? Like for instance, they really like power a lot. Someone might want to be a president, and then you are wondering, what the hell is this person want to be a president for? Yet we know this person has accumulated a lot of wealth, right? So that's dopamine, because once you get something, you want more of that something. So it's this also explains what the addictions as well, because you know how you become addicted. You begin by the first puff, right? Then you find yourself the second, the third, the need for more. So the brain's reward system, it's what fuels overtrading and impulsive risk taking. Okay, so when we put it now in terms of trading, so when a trader wins, dopamine is released. The moment you make those winning trades, dopamine is released, and creating a high in quote, all right, that drives the urge to repeat the feeling. Okay, often by increasing the lot size. Now you begin increasing the lot size because you want to repeat that feeling of making money. You start ignoring your trading plan or your rules, and then you start forcing trades because you want to feel good again, because you made the first dollar, you made a dollar, you made $20, you want to make another dollar. It's 9 a.m. in the morning, you have made $100. So you tell yourself, by the time we are 6 p.m. in the evening, I will have made maybe maybe $150 or maybe $200. All right, so that's dopamine, and that's how human beings are wired, because it fuels over trading and impulsive risk taking. So dopamine itself is a chemical craving for more that makes traders to crave for more profits, right? By blinding the judgment and leading to inconsistent results. Because you can all bear me witness, the more you overtrade or the more you trade, the higher chances that you might make losses. So, and the reason why you see that the most profitable or the successful traders, they position themselves accordingly, like maybe 2 or 3 quality setups in a week, right? And they are done for that particular week, because the secret is the more you trade, the higher chances that you're exposing yourself to bigger risk, and then the higher chances that you might make those particular losses. All right, you might make even more losses. Okay, so greed isn't just about money, by the way. So because it's a biological loop tied to instant gratification, right? So today I'll teach a little bit of biology, but it's good to understand this, so that now when you are fearful, when you are becoming greedy, you know from what point you are going to approach it. So know that this is how it's a biological loop, right? That is actually tied to instant gratification. So you don't want to wait to compound your money or to make $100 maybe in a month. You just want to deposit $100 today and make $100 in profit today, right? That's what you are calling instant gratification. So the reason why you need to understand this that I'm talking about, the dopamine and the need for more, is because by understanding it, it will help you to detach yourself from thrills, right? Focusing on the process rather than the outcome, like I have been able to emphasize. So it will also help you build discipline and the needed long-term success, or the needed urge for long-term success. Because in forex trading, it's not about instant gratification. This is not a get-rich-quick scheme, as most of I'll not call them traders, but these are influencers who try to make forex look like a get-rich-quick scheme. Yet it is not. All right. So actually, this is a get slow rich scheme, and also we can call it a get poor fast scheme, if there is such kind of a thing. Because if you don't approach it the right way with the best psychology, you can deposit $1,000 today. All right, you can be able to deposit $1,000, not even $1,000. You can deposit even $1 million, right, today, and tomorrow morning you have nothing. Right, tomorrow morning you have nothing. So it's all about long-term success. So don't look at it like it's an instant gratification. If you look at it that way, then now you'll be messing up with your dopamine. So there'll be always that need for more. So you need to be in a position whereby you're able to control your dopamine. All right. So then there is the 4-part framework for bulletproof trading psychology. Right. So, and this is where we talk about clarity, control, consistent, and conviction. So when you're talking about clarity, you need to know your strategy, goals, and limit. This is now where we talk about the trading plan. So you need to be as clear as possible. Understand your strategy inside out. If you're trading supply and demand, understand it inside and out. If you're trading ICT, understand ICT inside and out. All right. And also your goals. Have goals, right? Because if you're trading without goals, or if you're trading without a plan, definitely your plan is to fail. Okay, so the key thing is to have your goals in place, so that when you're trading guided by your goals, and also to have limits. Limits will help you not to overtrade. If you achieve your limits, let's maybe, or your targets, maybe your daily targets, even if it's 9 a.m. in the morning, you need to exit the market. If you continue trading, maybe you can continue trading in the demonstration account, all right, until the next day. Now you start chasing the target for that particular day. right? So but the best way for setting these limits, I actually prefer maybe doing like maybe yearly targets, then you break them into semi-annually, then you break them quarterly, monthly, and then weekly. If you give yourself daily goals, remember what might happen is that you might feel frustrated. Maybe it's on a Monday morning, you haven't gotten any setup, so you are fearful that maybe you might not hit the Monday's target. All right, so then what will happen, you start now forcing trades. Okay, but if you have weekly goals, if you track those goals on a weekly basis, then it means even if you don't get a setup on Monday, you still have Tuesday for you to chase on those targets. You still have Wednesday, Thursday, and Friday as well. All right, so but sometimes for newbies or novice traders, daily goals can create some certain some types of pressure and make you now to start over trading. Okay, so then there is what we are calling control. So control is very important because you need to master your emotions, reactions, and risk. Remember, we have talked about you being able to control the process, not the outcome. All right, once you control the process, the outcome will take care of itself. Okay, so control is very much important. That's also where mastering yourself falls into, because you need to really master yourself. You really need, like we have said, mastering yourself equals to market mastery, right? So know your emotions, all right? Master your emotions inside out, all right, so that now when now your emotions start manifesting when you're trading, you are able to approach it from a point of understanding. Okay, then your reactions and your risk, whether you are a risk averse, right, etc, etc, those things they are very, very important. That's what you are calling control. So then we have consistency, whereby you need to build routines, journals, and habits. So what is your trading routine? What is your day trading routine looks like? All right, for instance, myself, when I wake up, I usually look at the forex factory, the forex calendar. All right, then I go to the charts, I start analyzing the charts, I mark my setup, and now I wait for my setups to materialize. Once I take the setup materializes, I take those trades. Then maybe I can read a book also, maybe I can attend maybe probably webinars or any other. I can be doing other things as I wait for my trades to materialize. Once they materialize, maybe they hit the stop loss or maybe they hit the take profit, then now I can go and journal those trades, because again, journaling is very very important, right? So I will journal those trades, and every Saturday basically I have to take some time to look at the trades that I took the entire of the week, analyze them, whether they were winning trades, whether they were losing trades. For the losing trades, I'm able to understand the key mistakes that I made, and therefore I'm able to improve the following week. For the winning trades, I'm able to know where my strength is, and now I can be able to capitalize on my strength. So if you're trading without journaling, that is suicidal, because how will you be able to measure your progress? It's not about depositing $100 today and by Friday it's $150 and you are happy because you made $50. It's more than that, right? Trading is a business like any other. We are not looking at the monetary value of it, because if you took time, let me give you a surprise. If you took time, even if you made $50, you are profitable, yes. But if you took time to look at that journal, you realize that there were some trades that you lost, the others that you won. So what the journal will help you is to be able to identify your mistakes and be able to improve on that. So that tells you that next week you can even make $100 in profit, because you have been able to improve on your on your mistakes, right? But I know most of us, how we measure progress or how we measure success is by the monetary value. But the moment you start looking at the monetary value, then you'll not go long, right? You'll not go far away. You'll not go far away. You'll just get a loss. Then you start revenge trading. You start going against your trading plan because you feel that you are entitled to make money, whereas remember, in the financial markets you are not entitled to make money. All right, so that is very important. Also, under consistency, I have seen most of the novice traders, they come learn forex. Once they learn forex, now they start doing what, they start trading in demonstration account. The demonstration account becomes very profitable, so now they are very happy even to transition into live trading. Yes, they transition into live trading, and then in live trading they start asking, is the demonstration market the same as the one in the live account, right? So the key thing that I want you to understand is that your demonstration account is basically to help you to fine tune your strategies, right? So but the live account is going to teach you more on psychology, because remember, the reason why the demonstration account will not teach you psychology, it's because that is not real money. So there is no emotional attachment between the money in the demonstration account and yourself. So you can, the reason why you find yourself, you can even take a demonstration, you can take a trade in a demonstration account and you forget that you had a trade. You remember maybe after 2 days, 3 days, one day, oh, I had a trade running in demo account. But when you go into the live account, after every 1 second, you are looking at how the trade has performed, how is the market moving, right? Because now there is that emotional attachment. So in your live account, the reason why we talk about beginning small is because you are still learning. Even if you find that your strategies are quite good in the demonstration account, still in the live account you are learning, and you are learning actually what really matters the most. The 90% of trading, the psychological bit of it, you are learning it in the live account. So the reason why now you start to begin what? You need to begin small, and small is relative. $20 might be small to me, to someone else $1,000 might be small, to someone else $10,000 might be small, because we are all able differently. So talking about consistency, it's also important to know that so I was giving an example of newbies. So they come now, they transition to live account, and then they make losses, and what happens? They disappear for 2 months, right? Because they see like this thing is not working. Okay, so because of greed, right? So greed and fear now. So what comes first is greed. So you become greedy, then now you end up losing money, so you become now fearful, and then now you exit or you quit, all right? Or maybe you pause. Then after some time you remember, oh, I had taken a forex trading course. Maybe you have seen a screenshot online, someone making who has made some good chunk of money, right? So what happens next is that now you come back into forex trading after 2 months of break. You come in and you feel like you are totally new, like it's your first time you're seeing these charts. All right, so consistency is very important. I usually say the moment you began forex trading, this is a continuous journey. All right, this is a continuous journey until you reach maybe a point of retirement. You feel like right now maybe what I've done is enough, I don't want any more of this. But if you keep taking unnecessary breaks, prolonged breaks, all right, and even during those breaks you're not in sync with the market, then you lose consistency. All right, you lose consistency. So the fourth thing is conviction. So conviction is backed up by data and self-trust. All right, so how do you convict yourself? By back testing. So if you have a strategy, or if you have a particular strategy, before even you say that I'm an ICT trader, you need to convict yourself by back testing, right? So you back test, you back test, you back test until you feel comfortable that your strategy is a profitable strategy. And what is a profitable strategy? Any strategy giving you even a 60% win rate, that's a good strategy. All right, so the key thing now is for you to look at ways that you can be able to increase the winning rate from 60% maybe to 80 or 90%. All right, because again there is no strategy that is 100% foolproof. All right, so no strategy that will give you wins all the time. There has to be losses, because again no one can be able to corner the market. All right, then now the aspect of trusting yourself. Okay, trusting yourself is whereby once you do your analysis, and maybe probably you see that maybe you are buying gold, for instance. Okay, then now, because I know most of the newbies, they are like in 10,000 telegrams channels for signals. Then you go to a telegram channel and then you find someone else saying we are selling gold. All right, so and then now definitely what will happen, this one I'm sharing out of experience. I'm sharing out of experience. When I was very new into forex, I was in like so many telegrams channels, so I could do my analysis. Then I go to the channel, maybe I see someone, maybe if I'm buying euro USD, someone else says that we are selling, and I tended now not to trust in myself and trust that person, because I feel this person who has a telegram channel, maybe he has more knowledge than me, right? And this really costed me a lot. It also costed me not only in terms of money, but time for me to become a successful trader, because now I became like a slave to those telegram channels. Okay, so this is a critical advice, or a key advice that I will advise you as a newbie. So it's important to trust in yourself, because if you don't trust in yourself, then there is no way that you can be able even to master yourself. You cannot even master yourself if you don't trust yourself. So you have to begin by trusting yourself. Yes, it's a buy. Take that buy. Take a loss, all right? Let it eat the stop loss. Then revisit that trade. Learn and understand the mistake. Then tomorrow you'll not be able to repeat the same mistake, because they say that it's a fool who does the same thing all the time expecting different results. So the mistakes are there for us to be able to learn from them. So if you don't make those mistakes, then it means there is no learning. All right, so you make the mistake, then you learn from that mistake, and that means that higher chances that you are not gonna repeat that mistake again, right? So it's very important. I usually call them the 4-part framework for bulletproof trading psychology, or you can call them the four C's. All right, so it's very important. I'm going to repeat them. We are talking about clarity. You need to be clear. Clarity. We are talking about self-control. We are talking about consistency and conviction. All right, consistency and conviction. So there are some tools that we use, that is a trader's toolkit, basically for I call them bulletproof tools. These are tools that are going to help you basically in terms of mastering your psychology. So we have the trading journal. All right, so trading journal, like I've said, it's very important for you to be able to journal those trades. And let me shock you, one thing that you find traders that makes traders not to journal, or if you find yourself not journaling, if it's not laziness, then know that you're over trading, because you'll open the MetaTrader 4 maybe at the end of the day. So you're trying to journal the trades that you have taken, and you realize that you have taken like 20 trades. Honestly, journaling 20 trades on a daily basis, sometimes it will reach somewhere and you'll feel tired. All right, you'll feel tired. So if you find yourself not journaling, either you are lazy or maybe you're over trading. All right, so trading journal is something that you cannot do without it. All right, you cannot be able to do, or you cannot be able to be successful without a trading journal, because again, trading journal is going to help you in terms of knowing your win rate, knowing your strategy, whether you are newbie. So it will help you to know your strategy, your trading style. It will reveal so many things to you apart from the winning rate, so many other things. All right, and again, it will help you to measure your performance. Remember, whatever is not measured is never achieved. Okay, whatever is not measured is never achieved. Then we have what I call the pre-trading mental checklist. So this one I'm going to share the link. I'm going to share the link with you. All right, I have the link whereby you can be able to download it. So let me drop that link in the chat. So that you can be able to download that template. Right, it's very very important. Okay, so I usually call it the bulletproof trading mindset worksheet. All right, a bulletproof trading mindset worksheet. So I'm going to share it in the chat in a minute. I'm gonna share it in the chat, so you'll find it there in the chat. So also we have what we call time-based risk posts, and this is where by now stopping trading maybe after 2 losses or 3 losses. That will depend on how you are going to how you are going to define your rules. All right, that depends on how you are going to define your rules. So there are those traders that if they take two consecutive losses, they take a break or they pause. Right. Then there are those traders that maybe if they take two, three consecutive or four consecutive, whatever the number of consecutive losses that you take, basically the time-based risk pause is very important in trading, right? Because if you continue trading after losing streak, then what will happen is that you might continue even losing more. So because your mind has already, your psychology has already been interfered with. So taking some break, like maybe 2 days, 3 days, it's very important so that you can refocus, so that you can refresh yourself, and you are now set in terms of now continuing to trade. Then we have mindset audios and affirmations. All right, so like you find myself, if I'm trading, there is a track or there are some songs that I usually like listening to. They psychen me up. They help my moods to go higher. Right, I feel more relaxed. There are other traders who exercise affirmations. I've also used affirmations. Affirmations is whereby you say that maybe probably I'm a successful trader because I exercise the risk management. But I'm going to share some of the affirmations that you can be able to use or to adopt when it comes to trading. Then we have the 5 minutes pre-trade meditation. So before you take the trades, all right, even as you wait for your setup to materialize, meditation is very important. All right, meditation is very important. No wonder even the Bible says that meditate upon this book of law, so that you may be successful and prosperous. So meditation helps you basically to refocus your mind. Okay, it helps you to be in a point that you feel confident in terms of now maybe taking trades. Let's talk it in terms of trading. So you feel that now you're in a point that you can be able to take the trades. They give you the confidence that is needed when it comes into trading, right? So the other thing that is important is the edge, which the edge is in the reps. All right, the edge is in the reps. What am I trying to say here? Confidence comes from evidence, right? Confidence comes from evidence. So for you to be confident, there has to be evident. And what is the evident, by the way? So evident here, we are talking about uh, um, you being in a being able to execute your trades the right manner, not chasing after setups. All right, avoiding things to do it like with FOMO, that is a fear of missing out. All right, so the moment you see yourself, you have been able to master yourself. All right, the moment you see that you are in a place that you can be able to tame your fear, your greed. All right, so that's when now confidence starts coming into place. All right, and that means that you'll find yourself being profitable again. But I don't want you to drive your confidence more on the monetary value or the dollar value, but I want you to drive your confidence in a way that you are able to analyze a trade, take a high probability setup, manage that particular setup. All right, because the moment you tie your confidence with money, or the moment you tend to concentrate so much on money, what it happens is that you end up maybe over trading, because what is driving you is money. So you want to make more money so that you can be more confident. Then you might end up doing what? Over trading. Okay, so it's not about the dollar value. All right, the reason why I've told you, most of the traders that I've interacted with, even when I began, I said I usually target 250 pips on a weekly basis. I didn't say I target X amount of dollars. Okay, because the moment you begin looking at it in dollar value, that leads to greed. It's a psychological aspect. Remember, we talked about dopamine, the need for more. Okay, so if you start tying it in monetary value or the dollar value, then what might happen is an aspect of a trading, right, or being greedy. Okay, so You need to backtest, demo trade, and track your results. That is a no-brainer. I've really emphasized on that. Backtesting is important, and for you to be able to prove that a strategy really works, I would recommend maybe backtesting like a year of previous data, looking at it in terms of that particular strategy, and then now you are able to validate that your strategy works. Then demo trading, again, it's very important. That's where you fine tune now your strategy, whatever you've backtested. Try to trade it in a demonstration account, and so that you can know whether you have mastered or understood it. And then as you trade even the demonstration account, it is important to track your results. Even if you are demo trading, it's important to track your results, so that now you can be able to know the areas that you can be able to improve, your weaknesses, so that you can be able to improve them. All right, so create what I call a proof stack that you can execute your plan. Proof stack is things that will make you feel confident that yes, indeed, I can be able to follow my plan, because there is no need of creating a trading plan, yet you are not in a position to be able to follow that plan, right? So it doesn't make sense. It doesn't make sense you wasting time writing the plan or the trading plan, curating the trading plan, yet you don't even follow that plan. All right, so it will be like more of a waste of time, right? So that is very important. So the other thing that you need to look at is building the trader identity. So now you're trying to build your identity, or you're trying to build your identity as a trader. So don't just do trading, right? Don't just do trading, be a trader. So if you do trading, this is where by now you are looking at getting a few dollars, right, or making some money. This is when you are approaching it from a monetary bit of it. But being a trader, it's whereby you want to improve on a daily basis. Okay, so it's where you want to perfect your strategy on a daily basis. That's what being a trader really looks like. The skill, the knowledge, right? What are you doing on a daily basis to be able to add on your skill? Okay, or maybe are you the kind of trader because you're making $20, maybe you are making $20 consistently, all right? Or maybe you're making, yes, let's say maybe you're making even $20 consistently, which is good. So you don't feel like you can learn. All right, so remember, pride comes before a fall. Okay, so like for instance, I'll give an example of myself. Anytime I'm not trading, you'll find me maybe probably listening to some podcast about trading, or maybe trying to listen to someone else maybe webinar to understand what is this person talking about. You'll also find myself reading some books. Like for instance, I'm reading this book again now for the 7th time. All right, this disciplined trader, the disciplined trader. I'm reading it for the 7th time. All right. So why am I reading it for the 7th time? All right. Don't I have time to do other businesses? Because you want to keep reminding yourself. Remember psychology, things to do with psychology, it's easier to forget, right? So the reason why you need now to keep reminding yourself, read that something, or be in a position you are studying something that will help you to improve on a daily basis, right? So don't just do trading, but be a trader. Okay, be a trader. So identity is very important. And this is where now we use the affirmations template. For instance, you can say that I'm a disciplined trader, I follow my plan, I think in probabilities, because all traders, all successful traders think in probabilities. And the reason why most of the time when you see when you join my live market analysis, I usually look at it in two ways. All right, if you are selling, yes, what if the price does not sell? How will we be able to position ourselves in terms of buys? Because you want to think in probabilities such that the market will not surprise you in any way. If you let the market surprise you, what will happen is that you'll feel demotivated. Okay, because if you take a loss, maybe you don't know how you can be able to counter that loss. And again, remember we talked about being consistent. All right, so you can use the affirmation template. So you can say that I'm the kind of trader who does XXYZ, and here I have some few affirmations for you. So you can have affirmations in terms of mindset and confidence affirmations. So maybe you can say I'm a confident and disciplined trader. Maybe you can say that I am in control of my emotions and actions, right? You can have affirmation based on patience and discipline. Maybe you can say that I wait for high probability setups to come. I follow my trading plan with consistency and precision. You can have even affirmations in terms of abundance and success, like every trade setup. Every trade is a step forward in my growth as a trader. All right. I attract profits through preparation, patience, and execution. These are affirmations. These are the things you say to yourself to keep yourself psyched up. All right. To make sure that your confidence is at the level that is required. Because sometimes you also, these affirmations will help you during those times when you take losses. You reaffirm to yourself. All right. You reaffirm to yourself so that you don't accept that loss to play around with your emotions. All right, so you reaffirm to yourself that I am a confident and disciplined trader. All right, that I follow my trading plan with consistency and precision. So if I've taken two consecutive losses, my trading plan says that I need to take a break. Okay, so it is very important. Affirmations have really helped me, and I know maybe some of us maybe in different discipline, right? Maybe even in the place of work, even in real life itself, these affirmations or meditations work wonders in terms of trying to re-energize yourself. So your daily routine or the daily routine of a bulletproof trader. So what is the routine? In the morning, we usually do a brief review of plan. All right, there is the mental rehearsal. There is now checking the economic calendar. So brief review of the plan is how you plan maybe your day to be. Then the mental rehearsal, here comes now the affirmations, the meditations, and then now maybe you check the economic calendar. Then now you do the market analysis. Then during the trades, there are the things that you need to do as a bulletproof trader. Number one, stick to the checklist. No matter what, make sure that you stick to the checklist. Okay. So number two, there is what we call 0 second guessing. Right. So don't second guess yourself. Trust in yourself. You have done your analysis, you have confirmed your checklist. All right, then there shouldn't be anything that is making you to second guess yourself. Just execute the trades according to your checklist. That is, if it has met all the conditions in your checklist, then now accept the outcomes, because even if you have checked everything in your checklist, not all the trades will be profitable, right? You'll definitely take some losses. You can never corner the market 100%. So it's good to accept the outcome. Losses, they are the school fees we pay for learning. All right, so accept the losses and be in a position that you can be able to move on. Okay, so then after trades, what do you do? So also during the trade, this is where now you control the process. Okay, so putting stop loss at break even, taking partial profits, etc., all those things that I've taught you, or all those things that I've been able to mention. Then after trades, there is the reflection bit of it. So you need to reflect and not to react. All right, so reflecting is whereby you want to understand why maybe the outcome has been maybe a losing trade, right? But reaction is whereby now, because the outcome is a loss, now you want to react immediately by taking a counter trade, right? So what happens that you might you end up ignoring your trading plan completely, and higher chances that you're going to take even more losses. Okay, so then you update your journal, whether the trade was a winning trade or a losing trade. Put it in the journal. The journal will help you maybe to know your mistakes and areas that you're able to improve, and also to measure your progress. Then reward discipline, not just wins. Okay, reward discipline. Even if you maybe probably today you have gone into the market, you have traded, and at the end of the day you have made loss, let me tell you one thing. Even if you have made a loss, but you are disciplined, you are able to stick to your trading plan. You did everything that was right. My friend, reward yourself. Reward yourself, right? Reward yourself because you are able to be disciplined. You are able to follow your plan, right? Not just focusing on rewarding yourself when you have wins. Even without wins, reward yourself. Okay, it's very very important, and that helps you even to be more disciplined. Okay, so in parting shot as we wind up, remember you don't rise to your strategy, but you fall to your psychology. Okay, you don't rise to your strategy, but you fall to your psychology. Also remember, no psychology, no profits. Okay, no psychology, no profits. Remember we said trading psychology, I mean forex trading is 90% psychology and 10% execution or strategy, right? So also it is important to build a system that protects you from you. Okay, maybe that might sound like a tongue twister or something. Building a system that protects you from you. So this is whereby you're able to build a system that is going to help you to protect your emotions because you have mastered yourself. So you know maybe what triggers emotions to you. Okay, so it is important to be in a position that you have a system that is going to protect you from you when you are upset. All right, how are you able to relate that into forex trading? Are you going to be upset then you ignore the forex, you ignore the risk management rules or something, right? It is very very important to have that kind of a system that you are able to protect yourself. All right, so that being said, one thing that I can emphasize is that for you to be able now to also apply these kind of strategies that we have talked about, it's good to always be in a community of traders whereby now you are able to be responsible, or how do I call it, you're able to be to learn from others, and also to have what I call trading partners, or maybe responsible, someone that you are responsible or you are accountable, accountability partner, that is the word. All right, and I have a trading community, so you can hit me up, and if you're not in the trading community, I'm able to put you in the trading community. You can hit me up through my WhatsApp number, or basically you can comment, you can put the comment there, and I'll be able to reach you out. Actually, I'll be able to share my WhatsApp number so that you can reach me out. If you don't have a trading community, feel welcome to join my trading community. And I believe with that, we will be in a position to you will be in a position whereby now you can start applying all these things. So we will be going live basically like once in a week. I'll be trying to teach something new once in a week, maybe, probably. Besides that, I also publish videos, educational videos, every Thursday at 9 a.m. Kenyan time. So just be checking on that. Yesterday I published one. Next week we will have several. The key goal is to help you as a trader, right? To hold your hand. Okay, it's not about those that have interacted with me, it's not about show off. You know, I'm one person who is very humble. You'll not see me showing off that maybe like maybe you find other traders showing off, because the key goal is not trying to show off, but the key goal is trying to hold someone's hands. Because if you mentor somebody and this person becomes successful, then you have more than enough reason to feel, or you have more than enough reason actually to give even the confidence to continue doing what you're doing. All right, so I'll share my number there. I'm just writing my number. right? So that's my WhatsApp number. You can reach me out if you don't have a trading community, or in case of anything, just reach me out, and maybe I'll be able to help you in person, right? So looking at maybe here, I don't see, let me see whether there is any questions in the comments. So all right, so okay, so that's it then, and until next time, thank you so much for joining, and see you then.